Hello everyone, this is Kishore. Welcome back to my channel. Today I would like to do major indices analysis and also few important sector analysis. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. CNN fear and greed index, it came to the fear. We know that last couple of weeks it is in the fear. Let's see whether it's going to the neutral or extreme fear in this coming week. And this is sector performance. Friday sector performance, all sectors are green and technology led by 2.79%. And the last week performance, if you see, utilities led by 3.35% and real estate is 1.54. And 1 month, if you see, like utilities led by 5.29% and the consumer staples led by 2.25%. Looks like the money is moving from the risk off sectors to the risk on sectors, like utilities, consumer staples, they are risk off, and risk on is like a technology and communication services. But we need another week, follow through week, to make sure that the money is flowing from the risk off to the risk on. And this is by daily chart. It rejected right at that 50-day moving average, like 511.54. It closed it just below that, like 511.29, with a huge volume on the Friday. And the candle looks like it's a doji candle, like indecisive candle. If it breaks the 50-day moving average, that is very good for the bulls. And this spy daily chart again, the red line is the 20-day moving average and the blue line is the 50-day moving average. So right now the 20-day moving average is under the 50-day moving average. It's a bearish trend. But if it looks like we are making similar kind of pattern what we made in the last year, September and October. In September it made a low and then it hit the Fibonacci level of 0.618 level and then rejected and then made another low in the October. Similarly, here in the May, we made a low here 494 and it hit the very close to the 0.618 level, like 513, and rejected there. I mean, if it rejects there, then again we may expect the similar kind of thing in another low in another lower low in the month of May. That's the reason I mentioned this is like will history repeat itself in this month. And this is daily chart for the QQQ. So again, the same thing. It jumped to 20-day moving average, and the candle is good, and the volume is good, and the RSI also above 50, which is a good to the bulls. And this is QQQ daily chart. The blue line is the 50-day moving average, and the 20 to red line is the 20-day moving average. So right now the price between the 20-day and the 50-day moving average, we need to be jump above that 50-day moving average. That is good for the bulls. And this is QQQ weekly chart. It rejected the 10 week moving average. The red line is the 10-week moving average. It rejected there, and the volume is down in the last week. So this is one of the concern for the QQQ. Even though the price went up, the candle is good, the volume is low. So that is a little bit concern. If it breaks this 436 level, then that is good for the bulls for the QQQ. And this is IWM daily chart. So it rejected the 0.618 Fibonacci level, like 204.10. So and also it rejected that 50-day moving average. So it's closed under the 50-day moving average. And also on Friday, job data came worse than the expected. That's the reason market rallied, because market is expecting, because of the bad data, there is a very near soon rate cut may take in place. But if that is the case, IWM is the one which need to be benefited. The rate cut happened, that is the one which need to be lead. But it closed below the 50-day moving average and the red candle. That's a little bit concern to me. And this is the IWM daily chart. Again, the 20-day moving average is the red, and the blue line is the 50-day moving average. It closed below that 50-day moving average. Let's see whether it is next week it closed above that 50-day moving average or not. We will see. And this is IWM weekly chart. Again, it is in the same, the range bound between the 211 and the 180 levels. So on March 2022 it went to 211, and then from there it never touched it, and again in the March 2024 it touched it and rejected again. So if you think this is a big range, if it breaks 211, that's a huge rally for the IWM. And this SMH, semiconductor ETF, it made a, in the weekly chart, it made a cup and handle pattern, and then the mezzanine move is almost like hit at the 225. So it hit that mezzanine move and then rejected there, and right now it rejected the 10 week moving average, and it's closely below of that. So the measured target is done for the cup and handle pattern for the semis. Will it break that or not is the main concern. If it breaks, then we can think that market can rally. Otherwise there is a huge downside is possible on the market, because this is the major sector which helped the QQQ to rally. And this is XHB home builders. This is also one of the major sector which helped the market to rally. Again, in the weekly chart, it made a cup and handle pattern, and it hit the 80% of the mezzanine move. So there is a chance sometimes it hit the 100% of the mezzanine move, or sometimes it hit the between 80 and 100. So right now it hit the 80% of that mezzanine move, like 24 points, and it rejected there. So and it closed below the 10-week moving average. So these two sectors need to be rally to make market to go up from here. And this is the transportations. Again, this is back to its range between that 90 and the 70 levels. So I do not see any sectors, the three sector, which are the three sectors helped the market to rally last November to the March. So these three are rejected at the measured targets or at the resistance levels. So they need to be break those levels and go up, then only the market can chance to make a new higher highs. So summary is all three major indices are stuck between 20 and 50-day moving average on daily charts. So and we saw the similar kind of pattern in the SPY in the last year October, September and October. That's the reason I'm thinking history may repeat itself. And no major economic news on the next week. So on the next week, few Fed speakers are talking, but there is no major news like job data or any CPI PPI data to make a binary event and move the market to the new highs. And semis and home builders both hit the cup and handle measure targets and rejected there. So this is one of the concern to me, to both semis and the home builders. The two sectors helped the market to go higher like anything from the last year November to the March, but now they are rejected the measured target. So let's see whether they break that highs and make the new highs in the coming week or coming months. That's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like them, please subscribe. Please hit the bell icon so that you'll get notification when I upload a new video. Please share this content if you and your friend looking similar kind of if similar kind of content. Thanks so much. Bye bye.